Here she is. Let's just accept her on. Hi everyone. I'm just waiting for her to join. There she is. Hello.
Hi, how are you doing?
I'm good, thank you. How are you doing?
Really well, thank you.
Good. Looking forward to the bank holiday.
Oh, absolutely. Looking forward to 4 hot days, is it? 2 days and a weekend?
Yeah, nice.
Only one thunderstorm forecast.
Oh, nice. Hope we're that lucky then. So thank you for joining us today, Camilla.
Of course.
And you're going to give us some insight on how litigation loans work. Is that right?
Yeah, absolutely. Just a brief run through of what we do, what we cover, and how we work.
Brilliant. That's fantastic. Yeah. So I guess my first question is, how does litigation loans work?
Sure. So what we're looking to leverage against, we will fund divorce proceedings all the way from a pre-petition to a final hearing, and even further if the case goes to appeals. And ideally, we're looking for that. The perfect case for us is that there's a matrimonial property. It's based in the UK, and the proceeds of that, we generally start at 50-50%. But the proceeds of that are divided, and whatever the client is set to receive, we will lend about three times the amount. Okay. So the idea is that we're lending that 33%, so we're never leaving anyone high and dry at the end of proceedings. There's always sort of cash reserves. Right. And we work by offering the client a credit limit. So we work very closely with their solicitor, and their solicitor says to us, this is a worst case scenario, it's going to cost X amount. Mm-hmm. And if that falls within our 33% ratio, then we call that the credit limit. Okay. And then your client is wanting to draw down to cover any and all costs associated to the divorce proceedings, be that children proceedings that are running concurrently, be that disbursements, we offer maintenance loans, so cost of living. They simply request a drawdown. It's approved by us, the underwriters, and then it clears into either the client's account for maintenance or the solicitor's account if it's for the legal costs or disbursements. And that will go on until the end of proceedings or the conclusion of proceedings.
Okay, perfect. So that kind of answers my next question, because it's not just limited to financial cases, they can use it for children cases too then?
Yeah, there's a little bit of variety into it. We are very much tied to that there has to be financial proceedings. We can't do anything standalone, unfortunately. It all has to wrap into the proceedings. Mm-hmm. But we will cover expert fees, valuations, forensic accountants, the breadth and the depth of the case is needing to go, we will generally cover it. We're of the mindset if it's related to the divorce and the client is happy to approve it, then we're happy to release funds. Okay,
fantastic. And what if the client has a bad credit rating? Does that affect it, or?
So it certainly comes into consideration, but we look a bit deeper into why does this client have a bad credit rating. Right. Our typical cases, we see that we are representing the homemaker, and sometimes the homemaker does not have all of these sort of mobile phones or even mortgage statements or anything. So sometimes there's no credit history at all, and sometimes there's adverse credit history directly related to the divorce. So neither of them will have a negative effect. What we're actually looking for in a credit limit is a behavioural pattern. So if there is a large default on something and that is related to the divorce, then that's absolutely fine. But if there's a history of not making small payments, small disbursements, and we can't see a reason for it, and when the client's question there is no reason for it apart from we forgot or we don't want to, that's when it has a negative effect. But we're very understanding that a client in divorce proceedings, money's going to be tricky in these circumstances, and therefore it may reflect in the credit report.
Okay, that's good to know. And so I'm assuming that if we was to get them in contact with you to get a litigation loan, obviously we would give them as much as we can an overall figure as what we expect it to come to. But what about if it exceeds that? So if the court puts in another hearing, which we didn't account for, because obviously they can do that sometimes, can they then get more drawn down? Is that possible?
Yeah, absolutely. So the loan is quite flexible. We say it runs for a year, but obviously we see cases that go on for 2 or 3 years, unfortunately. And we're always happy to extend that timeline. We never want to put the client in a tricky position. We generally want to know what the figure is that sees its case to its conclusion. And the reason for that is we don't want to be in a situation where the client says, I need more money, and we say, well, there's nothing more to give you. So we use that worst case scenario. Now, if it's at 33% already and the client says to us, you know, it's a final hearing, I can't pay a barrister, we would like to take, we're human at the end of the day. This isn't approved by an algorithm. This is approved by humans that have been in this industry for quite some time now. So there is that aspect of flexibility. So if it's just to see the client across the line, of course, we're going to do our best to help. We just can't guarantee that we can keep upping and upping and upping, because it becomes an affordability issue, and it ties in a little bit to ethics as well. As I said in the first time, and the first and foremost, we never want to leave the client bankrupt. The idea of this loan is to assist a client who doesn't have access to that cash, not to strip them of everything. So they've got their divorce finalized, but they can't rehouse, or they can't afford to rent, or they can't afford those, you know, those outgoings.
Okay, that's brilliant. That sort of ties into how we at Family Law Cafe work too, because that's what our aim is. So we try and get them that fresh start, but then with minimising the cost as much as we physically can, but still enabling them to, when they finish their matter, they can still start afresh with having something behind them, rather than, like you say, starting from scratch and having to literally build it all up again.
Absolutely. And I think that's quite important, because particularly the cost of divorcing can sometimes just skyrocket. Definitely. So it's so happy to have something like the Family Law Cafe that actually says, you know, this is what you're expecting, this is what you should be looking for, and, you know, this is possibly how you can keep your costs down. Because sometimes, you know, sort of everyone involved in this knows that out of nowhere they can suddenly skyrocket, and then you're in this sort of sticky situation. No,
most definitely. Yeah, we try to aim that to keep the costs down as much as we can. So basically, they're only going to pay for the stuff that they actually need, that they can't physically do themselves. If it's something they can do themselves, then of course we would rather just mentor them and guide them through it, so that way they pay them costs. Because like you say, they are crazy high.
Yeah, they can be. They come out of nowhere.
Yeah, exactly. And what's the fee rate for a litigation loan, or does it vary?
Sure. So for us, we're fixed, and we've decided to stay fixed because we want the client to know upfront what it is they're getting into. So we're fixed at 14%, and that's on anything that's drawn down. So if the client doesn't utilise that entire credit limit, then they're not charged on the entire credit limit. They're only charged on what they draw down. There's a 1% administration fee as well. So that's simply rolled into the loan, but it won't accrue interest. It's just to cover the costs of setting everything up. There are variations when it comes to if there's a trickier case, like if the client has absolutely no assets in their name, so on and such forth, we can look to put an insurance policy in place, and that will increase the administration fee to cover the cost of that. And the maintenance loan is a separate loan, and it's far riskier, so that's at 18%. But that's fixed, and there's a guarantee that it will not change throughout the course of your client's loan. So even if we decide to raise rates for some reason, if your client has agreed to the 14% and has an active loan, it will remain at that 14%.
Oh, okay, that's really good to know then. So even if they were to draw down again after that, their loan would still stay at the agreed original rate?
Yeah, absolutely. We're trying to make it as easy and as straightforward as possible. And I think that the best way to do that, and we also want to add that level of security, much as you do. It's almost a hand holding that we can guarantee X, Y, so they don't have to think about it. Once it's in place, it should be very easy to sort of understand and work through.
I think, like you say, it is literally about eliminating hidden fees, isn't it? So they're not getting these surprised fees that suddenly just pop out of nowhere.
Yeah, absolutely. And I believe we were the first in the market to publish what our fees were. Because it was the most common question, and particularly if I remember applying for personal finance on my car, and I had to fill something on a website, and then I had to wait for 3 or 4 days to find out what rate I could have, and it was awful. So we decided to make a change, and we publish it on our website and all our PDFs. I mean, I tell everyone over the phone sort of upfront what it is, and I think that's quite important. So we make sure to do it as a best practice now.
Yeah, no, that's definitely better.
Yeah.
Okay, so how would it work then if we was to, if we had a customer that wanted a litigation loan? Is it just a case of us setting up a conference call with yourself and then we go from there?
Sure, it's whatever's easiest. So at the moment, we must lend through a solicitor. We can't be seen to be paying the client directly for legal fees. So it could eliminate some of your clients, although We are looking for a way to lend directly because we've had a few litigant in person that would quite like to help. So at the moment we don't do it, but I'd like to say in the future we're quite close to. So generally, if you have a client that's quite interested, if they're thinking about instructing a solicitor, or even if they just want to discuss it, in the foremost, I say send them to me. We've got all of our information on the website, so it's riafamily.co.uk, and they can download PDF brochures that has all the costs, all the process, and any FAQs. But I think it's much easier to discuss with someone over the phone. So I'd more than happy have a video call, have just a phone call in the first instance. I've even been thoroughly modern recently and have been texting clients that find it easy.
We do that now as well.
I had a WhatsApp come through, and it was only like I recognised from the passport photo to the person's WhatsApp photo, and I was like, why did we not think of this? Because it's so practical in an everyday world.
They do prefer it now, don't they?
Oh, I think it's fantastic. So I'm more than happy to sort of talk in the first instance over everything, send them our way, let them have a look. If they want a video call with sort of all three of us in, if they feel more comfortable that way, we're completely flexible, and whatever makes the client feel comfortable is what we want to do.
Oh, that's amazing. Thank you. That's very, very insightful as well.
Yeah.
Well, thank you for your time today, Camilla. I hope you have a lovely bank holiday. And if anyone does have any questions about a litigation loan, or they want to come on board Family Law Cafe but are having problems funding it, then just give us a call and we can arrange a call with Ria Finance and get you set on board with us.
Absolutely. Well, thank you so much for letting us come and talk. It was an absolute pleasure.
No, you're more than welcome. You take care.
Thank you. Bye-bye.
Bye.